Hi everyone, this is Pete here. So today I'm going to talk about why I think the stock market is going to continue its run. And for many of the critics out there who thinks that the interest rate is not going to cut, you might need to think twice about this. Let's dive straight into it. Okay, so guys, you can see right now, even though the Federal Reserve did not announce a rate cut, they actually maintained the rate. But Bank of England, they actually maintained their rates. However, in their statement, they were a bit more clear, more optimistic about a rate cut as compared to Jerome Powell from the Federal Reserve. Okay, so they actually hinted at the June rate cut. Okay, so it says that they will signal the rate cut is approaching, and they say that a cut in June is possible, right? And likely that the inflation rate is to fall below 2%, which is what their target is, right? Based on the market path. Once again, you know, this is my pet peeve. I don't know who gave them the idea that it has to be 2%, but nevertheless, since both Federal Reserve and the Bank of England and ECB agrees it's 2%, let's just work towards that, right? And right now they are saying that it is very possible that it's going to reach 2% sooner rather than later, okay? So the Governor Bailey basically said that with the progress that we have made to make sure inflation stays around the target, it is likely we'll need to cut bank rates. And most importantly is the last statement. It says, possibly more so than it is currently priced into the markets. So right now, actually for the Bank of England and Federal Reserve, right now the prediction is between 1 to 3 cuts. So perhaps more than that, right? And in another statement, Bailey says that we need to cut bank rates over the coming quarter to make monetary policy less restrictive. Okay? Right? So that's what they want to do. And why is that so? Because actually from the Bank of England's angle, they say they see very encouraging news of inflation. Right? In UK, actually the inflation has already fallen very sharply, close to their 2% target already. Okay? So what they want to do is to really cut the rates before this inflation falls below what they expected. Okay? So if you look at the chart over here, let me just explain a little bit about interest rate for those of you who are not understanding what he meant. Basically what he's saying is that when we keep the interest rate high, okay, the inflation will drop down. But if the inflation rate keeps on dropping, it is also a bad thing, right? If it goes below the 2%, goes into near zero or even negative, actually that's a bad thing. Just ask Japan, okay? Japan has gone into an era of low to deflationary policy, deflationary economic, right? So that is not good as well. So for the Bank of England or even ECB, they need to be very careful not to overdo the rate hike, not to maintain high rates for too long. Otherwise, the economy may not just be about inflation, but it may cool down too quickly. Okay? And not just UK, right? We also saw that in Sweden. So Sweden makes actually their first rate cut already. Okay? Just about 5 days ago. And in fact, right now, other than Sweden, Switzerland has already made their cuts. Okay? So whether the rest will follow suit, we are not sure, but we know that in the Euro region, they are starting to do so. Okay, ECB themselves also said that they are getting more confident about rate cuts, and they even use the word plausible. Okay, guys, this is not meant to be an English lesson, so I went to research what does plausible mean. Plausible actually is much more significant and more likely to happen than possible. Okay, I know both sound very similar, but plausible just means that they think it's very likely going to happen, right? The vice chair of the ECB supervisory board, right, even said that the June cut for them is also very likely given the economic outlook remains stable. Right now, all the central banks in the world right now, they are trying to play a very delicate game, right? It is just like driving. I don't know how many of you are out there, you are old enough to know that actually in the past, cars are actually in manual mode, right? Most of the cars are in manual mode. In fact, for myself, I got my class 3 license because back then, there's no such thing as a automatic license. You have to take a manual license, okay? So this is the analogy that I'm going to give about what the banks are doing. Okay, so last time we all know that when we are driving a manual car, one of the things that we want to avoid is stalling the car, right? So if you don't push the correct gear, you let go your clutch too soon, then you're going to stall the car. Okay, so this is what is actually happening right now to the central banks. Imagine they are the drivers and the car is the economy, right? So what we want to do is right now, we think that the car is running at a too high a RPM. Maybe it's running at 5,000 RPM over here, okay? That's why it's too fast, too hot, and they want to slow it down. But take note, the engine of the car is the economy. While we want to slow it down, we don't want it to stop, okay? And we all know that for a car, if you slow it down too much, especially a manual car, the engine might actually stall. So it's not just that the speed reduces, the car may stop working. So what Bank of England, ECB, Swiss Bank, Swedish Bank, what they are saying is that right now what they see is that the RPM from a high level has starting to come down, okay? But they don't want the car to slow down too much. So what they want to do is to slowly let the economy come to a good RPM level, try to speed up a bit, okay, by lowering the interest rate, just like releasing the brake, to make sure that the car continues to move forward. Alright, so this is what the major banks are already saying. I think it is very unlikely that the Federal Reserve will not follow suit. Okay, so I think Federal Reserve right now, they are very in a delicate situation because there's economy at stake, of course, and there is US election coming up, right? So they also don't want to mess it up, and they know that they are the most important central bank. Whatever words they say literally moves the market, which is why in the last FOMC, when Jerome Powell says that they are definitely not considering hiking rates, right? That literally boomed the market. Okay? Alright. Now, as usual, I like to start my new format of updating the stock market. So I want to share with you guys right now. Let's move on to the charts to have a look what is happening in the stock market. Alright, so you can see since our last conversation, which was around 6th of May, okay, let me just put a marker here, somewhere around here. Okay, the market has continued gone up, right? So pretty good news. In fact, I would say this is what I call a classic retracement of a bullish market, right? The bullish market cannot be climbing in a vertical exponential straight line. It has never done that before, right? So there will always be times of retracement like this, and right now we are seeing this as well. Okay, so hopefully this will continue. When will it stop moving upwards? Nobody knows, but right now what we can see is that, hey, we are just coming off the market, right? And so this is a very shallow increase from the previous high. So I personally think that there's still more room to go, okay? Right? So this is the S&P 500. If you look at NASDAQ has done really well as well. From the last time we spoke, actually we were closer, right? So let me just zoom in for you. Okay, we were closer to the 100 moving average, daily moving average over here. Okay, and since then, we have really shot up. Right. So for those of you who take action, congratulations, right? This is exactly what Warren Buffett, Charlie Munger always say, right? Don't try to time the market too much, because when you try to be too cute, okay, you will end up missing a lot of opportunities like this, right? So don't be cute, be boring, but be profitable, okay? Right. Now let's look at some of the stocks. So what I do is that every day, I actually go through a list of stocks, okay? I'm very old school, I'm using pen and paper over here, okay? But I can share with you all later on how it looks like, okay? So right now, let me just talk about some stocks that I think potentially I'm personally looking at, okay? So once again, this is not financial advice, but I want to share with you guys how I analyze my watch list on a daily basis, so that you yourself as a viewer, as a follower, I want you all to also learn that skill, okay? That's very important. This is not meant for you to copy or anything, but I want to just share with you how I look at companies. Okay, so some of the companies of note. So previously we talked about FICO, and after we spoke about it, right, it was like 6 May, around this period. Wow, it had a fantastic run, okay? Yeah, it had a very good run over here, okay, on track for all high, and that's because I think there was some good news and some revised expectations from the bank side. Okay, so yeah, it was a very big run from then. We actually gained about, so I think I personally gained about 10% since then, right? Quite a significant run from there. Once again, FICO, very, very strong business. Okay, if we just look at the financials over here. Alright, so for those of you who are not aware, just go and do a quick research. FICO is basically the company, let me just click here for you, okay, that decide in terms of scoring, like, so if you go to US, you will hear them talk a lot about, oh, my FICO score is this much, therefore I can apply for mortgage, I can apply for credit card, stuff like that. Okay, and they also provide the software, right, to support all this decision making. So the banks will rely on FICO to say, hey, whether this person is reliable, financially sound enough for me to support him in terms of loans and stuff. Okay, so this is what you can see in terms of revenue, consistently increasing, net income also consistently increasing. Right, really, it's a boring business that just pays you over and over again. Okay, If you look at cash flow, fantastic operating cash flow. Even free cash flow is also fantastic. Very rare these days when you look at a lot of the so-called high-tech companies, right? They may not have fantastic free cash flow. Okay, the only thing I will bucket right now is that with the price increase, okay, for example, if you look at PE ratio, is really high. Okay, all right, it's at a pretty high level. And if you look at price to operating cash flow, it's very high as well. Okay, so right now when I look at FICO, I feel like, wow, it's also getting an all-time high. Really seriously considering whether should I take some money off the table. But otherwise, actually the chart still looks pretty solid. It's just that right now when the MACD is a bit more developed, stochastic is more developed, maybe it's time for us to, take some money off the table. Okay, but otherwise you look at ROA, ROIC, it's a fantastic business. Over here, you notice that the ROE is negative. It's not because they're not making money, but they have very low shareholders' equity. Okay, so you can see over here, they actually have negative shareholders' equity. So therefore, they are not positive in terms of ROE. But in terms of retained earnings, okay, it's actually keep on increasing. So it is not a bad business after all. Okay, right? So FICO is definitely one. Another one is also a F. Let's look at Fastenal. Okay, so Fastenal is probably a company I think most people would not have heard of. Okay, so maybe just to give you all a quick glance into what this company is. Okay, so the important thing is every time I look at a business, right, I just want to not look at the fundamentals, not look at the TA, but just briefly understand what the heck they're doing, right? Because if it's a business that's too complicated, right, and I cannot understand, then I would say maybe I want to stay out of it. Okay, but for Fastenal, I can't get any simpler. Okay, so if you look into this, what they do, basically they provide fastener products. Okay, as the name suggests, so your nuts, your bolts, your screw, your studs, your washer, you name it. Okay, right? You name it, they do it. So they supply to a wide industry, right? Farmers, truckers, railroads, mining, schools, retail, oil and gas. Basically anything that needs to be fastened, okay, is their customer. Okay. If you look at revenue, let me just zoom out a little bit for the benefit of everyone. Revenue, fantastic. Operating income, ever increasing. Net income is also ever increasing, right? So these are the type of business that I really like. In terms of TA, wow, I love this, right? I recently saw this, I was like, wow, having a orgasmic moment. Okay, right? It's coming back down to its 200-day moving average. Oh my gosh. Okay, if you look at weekly, of course, it's not that low. It hasn't even reached a 50-week moving average. So actually, I hope that it will come down a little bit more, right? To be more attractive. But if you look at valuation, okay, let's just look at valuation very quickly. You can see that the valuation is actually pretty decent, right? It has come back down quite a fair bit, right? The high was like 39, now it's like 33. Okay, price to book is about 11. That's about average, right? Operating cash flow, right? It's about fair as well, right? EV/EBIT is also quite fair. Right, but if you look at in terms of quality of business, ROA, ROIC, ROE, wow, you can't argue with this business, okay? Right, so this is definitely something that I'm looking at. Let me just put a note down in case I forget myself, okay? All right, now, previously we talked about Home Depot. That was a stock that we mentioned previously, okay? Right, after we talked about it, where was it? Okay, let's go back to daily chart. Okay. So after we talk about it in 6 May, actually it still maintains at the support level. So this is actually quite good. It shows strength in the business as well, right? Another one I want to look at is Meta, right? This is a big holdings for myself personally and also for my investors, right? That I do manage accounts for. You can see after it had a big drop due to those news about investing in AI. Once again, guys, why are you penalizing a company investing in AI? Nobody will penalize Nvidia for investing in AI, right? Nobody penalizes Apple for coming out with an M4 chip, right? But why are people penalizing Meta for thinking that they also want to invest in AI? In fact, if they don't invest in AI, I think I'll be quite concerned, okay? So, right now, from 6 May, when we last spoke, I think it went up by, let's see, how many percent? Let me take the center point. About 4%, pretty good, right? So I do think that right now, personally, I still feel that it's quite a good entry point even for myself, right? MACD is good. Stochastic has run off a bit, but RSI is still pretty decent, right? So this is a good company. I think I talked about AZO before. I just want to talk about the payment space, right? So MasterCard, I think this one, wow, I've drawn so many things. Okay, but overall you can see MasterCard, very nice downtrend. Okay, let me put up the cursor here. Very nice downtrend, hitting the 200-day. This is the 200-day, by the way. Right, very nice bounce. Okay, very nice bounce. So we talked about it in 6 May when it was still bouncing. Now you can see the bounce proceeds, continues. Okay, fantastic business. MasterCard is perhaps, I would say the underdog, okay, of Visa. Why? Because Visa is probably the most common one, whereas MasterCard is more common in the corporate sector. So actually, corporate cards, business cards, actually MasterCard has almost a monopoly type of situation, I would say, right? So pretty good business as well. Now, if you look at Visa, let's see, Visa, you can see also having a very similar chart, not as neat, not as smooth as MasterCard. I really don't know what happened here, okay? Why they have this like super big red candle. But otherwise, you can see generally it's also like that, then it bounced off recently. Of course, not as perfect as MasterCard at the 200-day moving average. Okay, so this is something that definitely want to look at. Okay, FICO, Home Depot, Meta, all pretty strong, right? I also particularly like home builders, right? I don't know if you guys are aware of. If you are not, US is having a housing crisis right now. There are not enough houses. People are just short of houses because those who own a house, they don't want to move because they don't want to pay a higher interest rate. Oh, by the way, guys, those of you who don't know, in the Singapore or in the ASEAN region or even in UK, right, usually you only have fixed rates for like maybe 2 years, 3 years. I think UK max out, we do 5 years or even 7. But in the US, listen to this, after you take on a mortgage loan, you can actually lock it in for 30 long years. And this is why right now, current homeowners, they just don't want to move. Even if their house price has appreciated significantly, they wouldn't want to sell it and buy the other one, because when they do that, they will have to so-called cancel their own old mortgage loan, which was maybe around 3%, and pay the current high rate, which is about 6 to 7%. So there's a very shortage of housing in the resale market, and the new market is pretty dry as well, because during COVID, there was a lot of stoppages in works, and right now the home builders are basically playing catch up. Okay? Right, so you can see on a 1 year basis, right? For example, DR Hortons, I mentioned this before, DHI, very good business, up 37% over the last 1 year. Okay, if you look at on a 5-year basis, right, this is a company that has gone up 200%. Right, brick and mortar business. This is literally the definition of a brick and mortar business. They literally use brick and mortar. Okay, right, and it's not just DHI. Let me just right now show you another company, Lennar. Okay. Right, you can see their charts are very, very similar, right? And now was up even more, 45% over the last 1 year. Okay, so these are really interesting phenomenon that we can see right now, right? That is happening. Okay, and okay, so these are the few. I think I mentioned about Berkshire in the last video. So if you haven't seen my last video, go and look at my last video where I talk about my 10 favorite stocks. Okay, and another one I want to share very quickly, right, is this one, banking, right, which is Charles Schwab's. Okay, so Charles Schwab had a very big drop previously, where they had the scandal, when banking crisis, remember First Republic and whatnot, Silicon Valley Bank, right? So they crashed, and then from there, actually it has already recovered quite a lot, about 60%. In maybe about a year's time, 60%, pretty solid, right? And Charles Schwab is perhaps one of the most interesting banks because they are not just a bank, but they also do a lot of brokerages, right? So Charles Schwab served as a brokerage, including Think or Swim, which I used to use until they decided to screw over the Singapore citizen right? And not serve retail. Okay, so but otherwise, if you look at the finances for Charles Schwab, right, they really have recovered quite nicely since the banking debacle they had, right? So if you look at the dip in 2022, 2023, there's a little bit of a dip, okay? But otherwise, if you look at cash flow, they have since actually improved the cash flow significantly, right? Very, very much, okay? And in terms of income, it has also improved quite a lot as well, right? So they had a ding, then after that they improved again, okay? So if you look at quarterly, right, you can see the net income has been steadily maintaining, okay? There's a bit of a ding here, right? But after that, it was improving already, okay? Let's look at cash flow once more, right? So operating cash flow is a bit uncertain, right? It's a bit uncertain, okay? Right. Let's look at ratios very quickly. Banks, I think usually I just look at very simple price to book, okay? And you can see the price to book now is not too expensive. It's not too pricey as well, right? It's a very, very good business. I would love to see the ROIC improve a little bit more, okay? A little bit more. But otherwise, to me, this is a fantastic business. A lot of companies still need them. A lot of businesses still need them. including retail investors, although they don't really serve Singapore anymore, which is quite sad. Okay, I used to love Think or Swim as a platform, but I was just reluctant to go through all the hurdles to qualify for AI, right? So yeah, otherwise this is a fantastic business. Right, what I look at right now is, you look at the chart, this is what I call a typical crocodile mouth. Typical crocodile mouth. Why? Because you can see not just the price chart going up, the moving averages is also heading up as well, right? Very, very, very good chart over here. All right. So, yep, these are the stocks that I want to share with you. Overall, I think it's just a matter of time when the Federal Reserve will start cutting rates. Okay, and that should bring about the next bull run from here. Overall, I think right now we are just about a little bit higher than what we have seen in terms of previous high, right? So the previous high was somewhere here. We're just a little bit higher. So I think there's still much more room to go from here. Okay, so my personal prediction is I think the bull run has much more legs to run. Alright, so I hope you all like the content over here. Let me know if you have any questions, and if you have any suggestions or what type of investing content that you want to hear from me, do put in the comments. And also, do you like the format like this, right? Let me know as well. Okay? Alright, so that's all I have. If you all like the content over here, do stay tuned for my next video. I'll see you next time. Bye bye.